Good morning. Happy Friday. It's Brett here with Directors with this week's market update for you. So, starting as always with the closing prices of the 10-year note. Monday closed at 3.858. Tuesday, of course, for 4th of July, markets were closed. Wednesday, closing price of 3.945. Thursday, 4.041. And today, so far, 4.032. So, the big news this week, guys, is the 10-year note breaking that 4% mark. It's been a very long time as hard we've seen the 10-year note above 4%. And the driving factor was yesterday, ADP's private job report. So this report was expected at about 220,000 new jobs. It came out showing 497,000 new jobs. Significant difference. So markets initially reacted saying, hey, showing the job market way stronger than expected. That shows the economy stronger than expected, which most likely will lead the Feds to raise rates here at the next meeting. So again, these are just the reactions of the market, but with that, pushing the 10-year note up and of course, mortgage rates up as well. So I think the biggest key takeaway here is we're in a volatile market. So, right now the markets are concerned about what's going on. There's a lot of reaction right away to every report. And it's tricky. One report shows things up, one report shows economy slowing. So there's just a lot of back and forth, which again breeds that volatility. The other unique thing right now is there's more certainty in the long run of where the markets are headed versus the short run. That's opposite as normal. Typically, it's easier to forecast, hey, what might happen in the next 6 months versus the next 2 years. So again, this inverse is part of what's causing that inverted yield curve in the bond market, but it's also making it tougher and tougher for traders. So I think, again, my big takeaway here is, hey, things will be fine for us long term. The economy will cycle. I know while we're in any economic cycle, I can think back to many in my career here. In the moment, it feels like a very long time. But once we've passed the cycle, it seems like a blink of an eye. So again, long-term outlook still looking the same. Short-term here, it's a pretty big market consensus that we will see a Fed raise next week, or next 2 weeks at the Fed meeting. And again, I think that's just what's going to have to happen. The silver lining I see there is, hey, I don't love rates going up, but as the Fed pushes it, it's with the intent of bringing down inflation, which ultimately will slow the economy in a good way, bringing down interest rates for us long term. So as always, any questions, scenarios, feel free to reach out. Other than that, I hope everyone has a great weekend here and take care. Bye.